Hey guys, Adam here from DirectionTrader.com. I'm going to do a daily recap for the 3rd of April. Just going to show a few trades that I took in the live trading room this morning, and then towards the end of this, we're going to talk about price structure and how we use it to trade on a smaller time frame, using larger price structure to trade on a smaller time frame. So we started out this morning. We did a pre-market trade here in the euro. We had a nice little wedge here forming over the last week or a couple weeks on the euro here. Market's oscillating back and forth. It had bounced off pre-market, off the lows. We noticed we had a nice uptrend here in the moving average, and we had a really good fib pullback on the euro. Pre-market happened right at 6:15 this morning. We ended up taking 17 ticks to the long side. We took profits at 4 and then up here at the highs for 212.50. So 17 ticks here pre-market, right before the market opened. Didn't take long. It was a really good move. Bounced off the lows. And then I kept talking about taking more scalps as the market traded up until it reached its high, which ended up doing later in the day here. So that was the euro. Let's move on here. We'll talk about the crude first, even though it came later in the day. Not sure what happened here with my screen capture, but crude, we had another really great trade. Trend was down. We took a fib trade on the full swing from the highs to the low here. We had some price structure in the crude, just like this, and we were looking to trade towards the lows. We ended up taking a Fibonacci for single contract for 31 ticks. We took profits down here at the low. What we were doing is we were trailing all the way down, and finally got stopped out for 31 here, right down here at the lows, whenever it started to oscillate back up. And then it ended up trading back to the downside, but we ended up getting 31 ticks out of it, so it was a nice move for us in the room. And then to talk about the ES, which is where I wanted to go into detail on price structure and how I use it. ES here, we had a couple different positions. We got one contract. The reason we use one lot here rather than two is because we were counter trend. The trend was down, and we were taking longs here, bouncing off of previous day's low, and a lot of other things I'm going to explain here in just a little bit. So I ended up going half size with a very small stop. Got stopped out for -4. And then as soon as I noticed that the sellers just went gangbusters right at that level, when it came back up, I jumped on board with them, and I shorted as well. Ended up getting +4, +3 for a 7 tick total on that. But to go back and talk about what the what today's topic is going to be, it's on price structure. So as you can see here in a longer time frame, we're in a pretty well defined upward channel, and inside that channel we have some previous lows here, and we defined a wedge of some sort, which is held very, very well for quite some time. And then on top of that, we have some more price structure that you can see coming up right here that the market's coming down to hit. But what I want to define is put all these things together. Now we have highs, so we have a nice resistance here that's become support, and so on and so forth. And the same thing applies. This is basic trend line drawing and price level drawing. Everybody can do it, but I'm going to show you how I use it, just using basic stuff. So remember back last week, what we were looking to do is when this market traded up out of this wedge, we had this nice wedge forming up here. And whenever the market broke that wedge, I wasn't trading long. My first reaction was to sell back down into the wedge, which is what happened. Came back down in, and I was able to sell short for a very nice trade on Monday in the live trading room. And then Tuesday, it bounced off the lows here. Monday afternoon, Tuesday started trading up. We started trading higher again, but making higher highs. So we did not get that rollover that I wanted on Tuesday until the afternoon position. We had these highs, waiting for price structure. We knew as soon as it broke these highs here, where's it going? It's going to retest the highs of this channel here. Sure enough, that's exactly what it did. Market rolled over. I took a short yesterday, right back down into support. Let me start to clear this up here, guys. So once it broke up, I wasn't taking longs because I knew I had this longer term channel line up here and resistance up here. So I waited real patiently. It broke and I got a short and I traded that to the downside. And then back to today to see exactly what I did today and how I used price structure today. We had the high. The market traded up. Pre-market touched the highs. So pre-market, I was telling everybody I did not want to trade any higher because we had a lot of resistance up here, guys. We had the channel and we had the previous price level. So I was waiting for it to roll over. Sure enough, that's what it did. Price started chopping and then it rolled over. We broke prior resistance, new support, and then on that I was looking to wait for a pullback and short it, but I never got this pullback. This market just went down, down, and never pulled back for me to get any type of a short. So did not get any of this up here. So we just had to wait. Wait. And as soon as we, if we're inside the previous day, what do? We sell the highs and we buy the lows. Here is the previous day's low of day, this red line here. Previous low of day. And then that happened to fall, this price level right here, happened to fall exactly in this little area here. So we had major resistance, became new support, and we had this upward trending trend line here, guys, all converging at one area. So we had trend line support here, we had support and resistance right here, we had previous low of day all right here. So guess what? I found that to be a nice area to possibly buy at. But since we were counter trend, we were trending down here on our smaller time frame, I went half size. I only went one contract on it. One contract, and I had a very small stop. So one contract, sorry about that, guys. One contract for a -4. So, all right, so once that failed, then I immediately started moving forward and took the second one. So once this failed, I didn't even get a bounce here, guys. I didn't even get enough bounce to reduce my risk, take my stop from -4 at least to my break even. I didn't even get that bounce. Once this came in, sellers came in, and I knew it was off to the races to the downside. The tick, which is, I'll bring over. Let me bring over the tick here, guys. The tick at the time had been severely selling off. We're talking at 7 o'clock this morning. This tick was not able to hold anywhere even close to breaking the zero level. So at this exact time, which fell right at, I guess, about 7 o'clock, 7:02, you see the tick had been making lower lows. High, high, and then right here is where we entered the trade, actually, for the short position. I'm going to explain. So as soon as this failed, it was all sellers. So what happens? Pulled back. I wanted to get right on board. I front ran the previous low of day and the Fibonacci pullback. I ended up getting a fill at 15.59. 15.59 quarter was the high, and I took +4, +3 off on that one. But what was a big red flag that got me out of it, once I got in it, see it broke price structure, right, guys? Came back and retested price structure. So once price structure's broke, comes back and it becomes resistance. So then I shorted right as the tick came back to the zero level and had a nice push down here. That makes sense, guys? And then as the tick started coming up, it was making higher highs, and I just wanted out of it, and I was trailing my stop down. So I got +4, +3 for a total of 7. Nothing crazy big, but I just wanted to explain exactly what I look at and how I use price structure. So once this price structure had broken, I went long here, it failed, so it came down and retested, and then I retook the shorts back down. So now what we're looking to do is start drawing more support and then use them as kicking points for potential long entries, trade back up to the major price levels. So I hope that helped, guys. It's very, very basic stuff, actually, but thought it might be of some interest. I had a couple guys in the room ask me about it this morning, so If you got any questions, don't hesitate to email me. If you're interested in it, come by directiontrader.com and take a trial in the live trading room. You guys have a good night.